So today I want to talk about something that most serious economists and historians are beginning to say quietly to each other, but almost nobody is saying out loud in public. And I want to say it clearly, directly, and with the full weight of the historical evidence behind it. The world right now looks almost identical to the world of 1929 to 1933. Not in every detail, not in every surface feature, but in the deep structural patterns, in the underlying economic mechanics, in the sequence of events unfolding beneath the daily news cycle. The resemblance is not just striking, it is alarming. And here is what I want you to understand. The First World War did not cause the Second World War directly. What caused the Second World War was what happened to the global economy between those two wars. The economic collapse, the trade breakdown, the resource scramble, the desperate nationalism, the military rearmament. Those were the mechanisms. Those were the engines that drove the world from one catastrophe to the next. And right now, in 2025, I am watching those same engines start to turn again. And I think ordinary people deserve to understand what that actually means for their lives. So let me walk you through this carefully, because this is not about predicting a third world war. I am not here to sensationalize. I am here to explain the structural economic patterns that historically precede catastrophic conflict. And what you do with that understanding is up to you. For the past 40 to 50 years, the entire global economy has been built on three interlocking assumptions. First, that cheap energy would always flow freely from the Persian Gulf to the factories of Asia and Europe. Second, that global free trade would remain open, safe, and reliable for every nation that participated in it. And third, that American military power would act as the ultimate guarantor of that entire system, the policeman of the world, the enforcer of the rules. These three assumptions were not independent. They were a system. Remove any one of them and the other two become unstable. Remove all three simultaneously and you do not have a temporary disruption. You have a structural collapse. You have the end of one world order and the beginning of something new. Something that history tells us is almost always more dangerous and more violent than what came before. Right now, today, all three of those assumptions are under simultaneous assault. The Strait of Hormuz, through which approximately 20% of all global oil trade passes every single day, has been disrupted. Energy prices are rising sharply. The IMF has already revised its global growth projections downward. Global trade volumes are contracting, and the American military is discovering that projecting power into the modern Middle East is far more costly and far less conclusive than the strategic planners assumed. In 1929, the global economy was also built on a set of interlocking assumptions that seemed permanent. The gold standard linked the world's currencies together. Global trade was expanding. American capital was flowing outward into Europe and Latin America. And then the stock market collapsed, and within 3 years, global trade had fallen by approximately 65%, not 10%, not 20%, 65%. The entire architecture of international commerce essentially disintegrated. What happened next is the part nobody wants to talk about. Nations, one by one, began making a very rational and very dangerous calculation. If global trade is gone, if we cannot import what we need through open markets, then we have to secure what we need by other means. Germany needed agricultural land and industrial resources. Japan needed oil and iron ore and food. And when the global trading system that had supplied those things collapsed, both nations concluded that the only reliable way to secure them was territorial expansion. I am not saying the world of 2025 is going to follow that exact path. History does not repeat with that kind of precision, but the underlying economic logic, the mechanism that drove nations toward conflict in the 1930s, is the same mechanism that is now being activated again. And if you are finding this analysis useful, please subscribe. I cover these structural economic shifts every week in plain language. Let us talk about Japan first, because Japan is the most instructive historical parallel and the most underappreciated current story. In the 1930s, Japan was a resource-poor island nation that had built an industrial economy entirely dependent on imported energy and raw materials. When global trade collapsed and those imports became unreliable, Japan's economy began to suffocate. Japan's response was to secure by military force the resources it could no longer obtain through normal commerce. The invasion of Manchuria, the push into Southeast Asia, the seizure of the Dutch East Indies for oil, all of it driven by one fundamental economic reality, a resource-poor industrial economy facing the extinction of its supply chains. Now look at Japan today. Japan imports approximately 90% of its energy needs. 90%. It has almost no domestic oil, no significant natural gas reserves, and very limited coal production relative to its industrial requirements. Its entire economy, the third largest in the world, runs on imported energy flowing through sea lanes it cannot fully control or protect on its own. For 70 years, Japan did not need to worry about this because America controlled those sea lanes. America guaranteed the safety of the energy supply chains that kept Japan alive. But now Japan is watching America struggle in the Persian Gulf. Japan is watching the Strait of Hormuz become a contested waterway, and Japan is drawing the obvious conclusion: the American guarantee is no longer as reliable as it once was. This is why Japan is currently undergoing the most significant military expansion in its post-World War II history. Its defense budget is being doubled over 5 years, from approximately 1% of GDP to 2%. Japan is acquiring long-range strike capabilities for the first time since 1945. It is deepening security partnerships across the Indo-Pacific. This is not aggression. This is a rational response to the collapse of the security architecture Japan has depended on for 8 decades. But a Japan that is rearming, that is increasingly focused on resource security, that can no longer rely on American protection, how does that Japan behave in a world of fragmenting trade and tightening resource supplies? The historical precedent is deeply uncomfortable. I am not predicting a repeat of the 1930s. I am identifying the structural pressure that the current situation is creating. Now let us talk about Europe. The European economic model, and Germany in particular, was built on a foundation that looked like genius for 30 years, but has now been revealed as extraordinary vulnerability. Cheap Russian gas in, cheap Chinese components in, high-value manufactured exports out. That was the model. German industrial output was essentially an energy arbitrage machine. Then Russia invaded Ukraine. The cheap Russian gas disappeared. And this Middle East conflict is pushing global energy prices higher again, just as Germany was trying to find alternative supplies. German industrial production has been contracting for multiple consecutive quarters. BASF, the world's largest chemical company, has announced permanent shifts of production capacity out of Germany because German energy costs are no longer competitive globally. When the world's largest chemical company decides Germany is too expensive to manufacture in, that is not a temporary adjustment. That is a structural verdict. Europe also carries enormous sovereign debt. Italy is at approximately 140% of GDP. France is above 110%. These debt levels are serviceable as long as economies grow and interest rates remain low. But when energy prices rise and industrial production contracts, those debt loads stop being manageable and start becoming existential threats. Now let us talk about China. On the surface, China looks powerful. Its military is expanding. Its technology sector is advancing. But underneath, China is facing a vulnerability that this conflict is ruthlessly exposing. China imports approximately 40% of its total energy needs from the Gulf. 40%. That is a structural dependency on exactly the supply chain this war is threatening. And China's entire economic model for the past 3 decades has been built on cheap energy in, manufactured goods out. China's transition away from that export model has been failing. Chinese household consumption as a percentage of GDP remains around 37%, one of the lowest ratios of any major economy. In America, consumer spending is approximately 70% of GDP. Chinese consumers are not spending, they are saving. They see the property sector crisis with developers holding approximately 20 trillion yuan in liabilities. They see youth unemployment that has run above 20%. And they save rather than spend. A China that cannot transition to a consumer economy that remains dependent on cheap imported energy, that faces slowing export markets as Western nations pursue decoupling. That China faces precisely the kind of structural resource pressure that historically precedes aggressive external behavior. Not identical to the 1930s, but the same fundamental equation. If you have not subscribed yet, do that now so you do not miss the next analysis. Now let me show you the financial layer beneath all of this. Since 1974, Gulf oil has been priced and traded in US dollars. Every nation that needs Gulf oil must hold US dollars to purchase it. That creates permanent global demand for the dollar. The Gulf states recycle those dollars back into US Treasury bonds and American financial markets. This recycling mechanism is what allows the United States to carry $36 trillion in national debt and keep functioning. The petrodollar is not just a currency arrangement, it is the financial engine of American global dominance. This war is threatening that engine. If GCC states are destabilized, if oil pricing shifts toward other currencies, the structural demand for US dollars begins to erode. And when that demand erodes, the mechanism that allows America to borrow and keep functioning begins to break down. This is the financial parallel to the early 1930s that keeps serious economists awake at night. So let us bring everything together. You have an energy system under structural disruption with the Strait of Hormuz threatened and global energy prices rising sharply. You have a trade system fragmenting at a pace not seen since the 1930s, with nations pursuing decoupling and supply chain regionalization simultaneously. You have a military security architecture under severe strain, with American credibility being tested in real time and major allies beginning to rearm independently for the first time in generations. You have major industrial economies, Germany, Japan, South Korea, facing structural energy vulnerabilities their current models cannot absorb. You have China facing a resource dependency problem and a failed domestic consumption transition that is creating precisely the kind of structural pressure that historically precedes aggressive external behavior. And you have a financial system built on petrodollar recycling facing its most serious structural challenge in 50 years. The last time this many structural economic pressures converged simultaneously was the early 1930s. What followed was not a temporary recession. What followed was the complete reorganization of the global economic and political order through a catastrophic conflict. I am not telling you that is what is going to happen. Nations make choices. Circumstances can change. The 1930s path is not inevitable. But the structural economic conditions that made the 1930s so dangerous are reassembling themselves in front of our eyes. The mechanisms are the same. The pressures are the same. The logic is the same. The world you grew up in, cheap energy, open global trade, American military protection, dollar-denominated everything, that world is not experiencing a temporary disruption. It is experiencing a structural ending. And what comes after structural endings of world orders is not comfortable. It is not a return to normal. It is something genuinely new. And the nations and ordinary people who understand that now are in a fundamentally different position than those who are still waiting for normal to come back. Subscribe for more analysis of these developments explained clearly and in simple English. And tell me in the comments which historical parallel concerns you most right now. The 1930s trade collapse, the 1970s oil shock, or something else. See you next time.